Welcome back to the Beginner Foundations course. Today we're going to be talking about market types. Now that you understand what trading is, the next step is understanding what market you're actually trading in, because not all markets are the same. There are a few main types of markets that you'll hear about: stocks, futures, Forex, and crypto. Each one works a little differently, but they all move based on price. The best thing to do is keep it simple. One mistake beginners make is trying to learn everything at once. You don't need to trade every market. In fact, focusing on one is how you actually get good. So, what are futures? Futures are contracts that allow you to trade the price of an asset like the S&P 500 without actually owning it. You're simply trading price movement. So, why do we trade futures? The reason we focus on futures is because they have clean movement, strong liquidity, and they're ideal for day trading, especially the way we approach the market. What is ES? ES is the S&P 500 futures contract. This is going to be our main market, the one we're going to focus on and learn deeply. What about the NQ? The NQ is the NASDAQ futures contract. It tends to move faster than ES, and we use it as a correlated asset for confirmation later. Think of ES as more stable and NQ as more aggressive. This difference is important when we start using them both together in our strategy. So the market runs in sessions. We have Asia, London, and New York. Each one has a different behavior, but we're going to focus on one specifically. And that's going to be the New York AM session. This is where the most volume and the cleanest opportunities typically happen. So I understand that not everybody's able to trade the New York AM session, and I've included a list of alternate sessions as well as alternate instruments that can be traded at different times. So bottom line is you don't have to miss out. There's going to be high probability opportunities in other sessions and instruments. You just need to adjust for volume and volatility. To keep things simple and effective, your goal is going to be to master one market in one session. That's how we're going to build consistency and get familiar with the market that we're trading. Thank you guys for joining, and we'll catch you on the next one.